Good morning, everybody, and this is your S&P 500 technical analysis for today. So we started off with a pretty solid meltdown yesterday and sort of continued breaking through, wrong level, breaking through multiple structures and then eventually getting held up here in this area here. You can see there's three, and there's sort of a support area there. So 43,600. The interesting thing about this 43,600 is that was pretty close to some of the bearish option levels for the closeout today. So and if I look at the options at the moment, what you are seeing is the call strike level. In other words, the bulls is, let me just get there quickly where the open interest is here. So the bulls have got the bulk of the options open interest at 4,400. So that's pretty much right where we are at the moment. I don't expect that. 4,450 is the next level, but there's only 10,000 open interest there, whereas 4,400 there's 27,000 open interest. When I look at the puts, the high volumes are gone. So 4,375 is the next level, and that's only 4,000 open contracts there. So yeah, so that just indicates that what happened yesterday is, with this meltdown, the bears did not wait for the options close out today. They took profit as soon as their levels were starting to get hit. So I anticipate we're probably just going to range about in this area, or alternatively just move the upside as the bulls try and maximize profits, because obviously the higher above their strike level they get, the more money they make. So anyway, a bit of useless information on options. Nothing really here. Nice pullback. Also a fairly decent structure on a Fibonacci. 50% pullback was right here as well. Just want to delete the noise quickly, and then we can continue. And we come down to the 3 hour. We've got a bit of a gap down, a bit of a range bar, a bit of, I would say, I'd call it rejection, a bit of profit taking here. And as I say, 4,400, that's where the main strike level is. And it always happens. Every options close out, wherever the highest strike level is, that's typically where price tends to levitate to just before going into the options auction. So I would expect us to be somewhere in this area, possibly higher. So I'm still not interested in buying this. I'll wait for the options close out before we actually buy. Then the other thing that you want to pay attention to is we have a range. Now, I've said this many times. So if you have a range formed, well, not sorry, not a range, a channel. So if you have a channel formed, and you break in the opposite direction of what you would expect that channel to break. So in other words, this is a bearish channel, but it's in a bull trend. So in other words, it's a flag. So we get a break to the downside like that. There's only a 25% chance that it's going to continue. There's a 75% chance that it's going to break to the upside and continue. When it does do that, when it breaks to the upside, it's normally a fairly violent move. I don't anticipate this being that violent. I think what we're waiting for is pretty much 50,000. So we almost tagged it. So that is pretty much the trade that's on offer for me at the moment. So whether it happens today, which is possible, or alternatively it happens next week, irrelevant really, but that is the upside target right now that I can see. So yeah, so for me, it's really a case of just waiting for the structure. There's not much structure building here. We're below moving averages. There's nothing really here that's indicating I need to be looking to buy. So or sell. Bear in mind, we're in a bull trend on the higher time frame, so I'm really not interested in selling. Oscillators all over the place. So for me, this is just sit on hands. You can see these two levels here. Those are the ones we need to pay attention to: 44.18 and basically 44,000. So those are the areas. 44,500, 44.50, sorry, which is where, let's put that in there. That's the next strike level. So you've got 4,400 down here, and then you've got 44.50 up here. So there's where the bulk of the bull contracts are. Now, the bulls that are sitting up here, are going to try and influence the market to push it up here, and how they do that is by buying the S&P. So they've got options in place, and then they'll come and trade with a few contracts on the S&P, anticipating to try and push the price up. The bulls down here at 4,400 are going to join in the party because they're in the money right now. So every time they start moving past the price, the acceleration of their profit just increases dramatically. So that's kind of the structure that the guys are looking for at the moment. So yeah, it's going to be, I think it's going to be pretty much more than likely a bullish day, at least up until the options close out, which is, I think it's around 11:45 US Central Time, AM that is. Anyway, enough of the waffle from me. I'm sitting on hands. I anticipate we'd probably stretch up to this area, then come down and bounce around. I don't see any bearish price action at the moment. All of this is based on noise, and also just the Delta variant, but it's really noise from the Feds that's done this. Jobs number was pretty good yesterday. That typically happens. The Feds they drive it down to they get an area for a decent entry, and then you get data that comes out that's positive, and then you basically get to ride the wave. But anyway, I'm sit on hands, not really interested in that at the moment. No real gaps on the 15-minute, nice and well structured off the bottom level. So yeah, that's kind of my view at the moment. It's probably worth watching the 15. If you start breaking structure, you can have a tight stop here, but expect volatility. That's what I'm saying. You've got a 50-point volatility from 44,000 to 44.50. So just bear that in mind. Anyway, guys, that's it for me. Hope it helps, and we'll catch up with you next week. Cheers for now.